Hey, what is up everyone, and welcome back to another video. Today we're taking a look at Dogecoin, which is currently up 4%. We're going to be also taking a look at a few other coins such as Bitcoin, Ethereum, and a few other alts as well as meme coins. But before we jump into all of that, I want to ask you guys to check out the Discord down below. You can see on the screen right now just how many trades we've been winning, and all the trades you see are members copying the trades that we're sending out to them. So we send out a trade to you, copy it over to your exchange, and you profit like you see right now. So make sure you join up so you can start copying those trades inside the Discord. You can also learn all the strategies that I'm personally using to trade every single day so that you can start mastering the markets as well. So yeah, make sure you join up. It'll be the first link there. Now back to Dogecoin. So, we've been crashing down quite heavily over the past few months on Doge and as well as the crypto market. And today everything's lighting up green. We have API up 19%. Dog with Hat is actually soaring, as is Pepe. But again, these other meme coins are coins that have been, drastically affected by this crash. Like Dog with Hat has fallen from $4.70 down to 50 cents, whereas Doge has only fallen from 48 cents to 18 cents. It's like just over a 50% crash, but Dog with Hat has fallen like 80-90%. And once you get over 50%, each like 10% mark is very, very huge. It's not just like a 10% dip anymore. It's really affecting the market cap. So out of all those meme coins, Dogecoin is one of the only coins that has really been able to still survive and still maintain a lot of its market cap and not really give up all the gains that it has given, ever since August. Yes, we've obviously plummeted a lot, but if we're comparing to where we were in August at like 7 to 9 cents, we're still up nearly a 2x from there. So it's not too bad just yet. We did fall to 15 cents, where again we were looking for a DCA level right here because it aligns with the Fibonacci of 0.786, which is a very good level to buy in at, and this is where we were looking to buy in at and did buy in at. So we're currently up, I don't know how much percent because it was on spot, so I think it's 17, nearly 20%. Really good stuff. But again, we're going to be holding for a while. We're not looking to sell for a 20% profit at such a good level of entry. Usually when you're entering at slightly higher prices, you don't want to hold for a 3-5x, but when you're entering on these massive dips, the risk to reward really only aligns if you're going to be holding until we see a 2-3x. Like on Dogecoin right now, this is going to be a 3x if we're just targeting the previous highs, and it makes it a lot more sensible. Again, this is going to be purely news driven, and this week we have FOMC, which is going to practically dictate where the market will go over the next few months. We get FOMC, I believe it's every 2 months. Sometimes we will get it, back to back, but it's usually every 2 months. And yeah, whenever that happens, we usually see a huge pump or a huge dump in the market. So with Bitcoin, we're going to be watching and seeing if we're able to break above 92k, or if we're going to continue to dump to 73. The reason that this FOMC meeting is going to have such a bearing on the entire market is because this has been practically Trump's plan ever since he came into office. He wants to borrow more money for the US, and with the current rates, it's very expensive. So he's essentially been making the market plummet a lot more, which would force the Fed into a position where they have to cut rates, even if they don't really want to. So yeah, that's what we're going to be hoping for. If they do cut rates, then again Trump should be able to easier negotiate the tariffs, which again would add more easing into the market, add more certainty back in, because there's a lot of uncertainty right now. And hopefully it should also strengthen negotiations for the ceasefire, which again is providing a lot of uncertainty in the market and obviously been causing these massive sell-offs. Like after the crypto reserve news and what happened in the Oval Office, we just continue to plummet simply because of that. Not because we didn't continue to pump because of the crypto reserve. It just instantly flipped overnight. So yeah, we could get the best news right now, and sure, we might pump 10-20%, but we're gonna dump straight back down until all of that is resolved. And that's why it's so risky entering right now, rather than it was risky entering at like 35 cents after the huge pump, because that was a slightly different market condition. However, there's only two main stages that you can make money in, and I think the second is the easiest. The first is using momentum to your advantage. When we're pumping heavily, you can start buying in and looking to sell quite early, but it's always quite risky, a lot of emotions involved, and it's usually going to be very minimal profits for the amount of risk that you're taking on. Whereas the second, which I prefer and which I'd recommend, is waiting for us to get these huge dips and start buying in at these levels. Like plop on a fib on a weekly, daily chart from the highs to the lows, and you could easily find some great DCA levels. Like here, for example, the 0.786 was an amazing level, practically bottomed out. I think we're looking at other areas as well here at 22 cents, but overall you can find such great areas to DCA in at, and once you do DCA in, you know, if we just target the previous highs, like for now for example, it's 3.2x, so you invest 10,000, you're gonna get 30,000 back. Yeah, very, very simple gains. You know, where instead of trying to buy the momentum and only go for 40% gains, and you know, when you're in that situation, you're constantly thinking that's going to go up higher and higher. But from here you can sort of take a step back from the market and just fully analyze, buying at these dips and just hold, set your take profits, and you can just simply forget about it. So that's why I much rather prefer it, and it's again what I'd be recommending. Yesterday we talked about the liquidations that we have on Bitcoin, which were above these highs right here. We are yet to clear them. We're still heading up, so we should be able to clear them hopefully this week. Again, FOMC is going to dictate the market heavily, so when that comes out, we're going to see either a dump or a pump. You'll know when it's come out because it'll be a crypto reserve like pump or dump. The S&P is reacting quite well this week. We're pumping back up, approaching 5.7k. Again, I think we'd probably come down to this level if the news is bad. 5.4k, find some support here regardless. So we are seeing a nice slight reversal, the first time in nearly a month that we're seeing back-to-back green consecutive candles. You know, previously it was practically just a flurry of red and a continuous dump, and now we are slowly starting to reverse again. That's just being shown across the entire market. The S&P and Bitcoin confluence each other so well, and again that just gets portrayed back into other coins. So what are we looking to do? Well, for Dogecoin, I mean, the plan is pretty straightforward. You know, we're DCAing in at roughly 15 cents. We already DCA'd. If it drops back down to here, we're gonna keep another level and buy in again. Second area, probably 12 to 13 cents somewhere here. Third area, you could be looking at maybe 9 to 10 cents. So 3 key areas if we continue to dump. If not, we already have our first area. Dog with hat, I'd actually really like some shorts on. Dog with hat has been falling. The community isn't as it was previously. I think shorts from this red box are really good. Again, I don't really like to short from, you know, an instant tap. I much rather prefer going into a lower time frame, finding an order block, finding a fair value gap, something like that, which would then dictate the position a lot more, and entering from that in that sort of perspective. You know, will Dog with hat survive and continue to rally? I highly doubt it. Again, anything is possible. We could probably get some news, we'll pump it back up, but $4, reaching $4 again, I think it will be very difficult. You know, if we compare it to ape, for example, this was a huge meme coin as well, and you know, so many whales were holding. It was one of the biggest whale held coins out there. We hit $27, now we're at 50 cents, and we haven't revived. You know, we fell to 260, came back up to 6, just continue to dump. We're at 50 cents. I think Dog with hat is going to be something similar. Sure, we saw a huge pump, came back down, saw another pump, came back down. I don't think we're going to see another huge pump like that. Sure, we might go up to 150 max, that's 3x, but I think it's going to be a sort of ever trend down, and we might not even go up to 150 unless there's some really good news. I highly doubt it. And whenever you see these big percent numbers for Dog with hat, just remember, you know, the previous days it's probably fallen by double that, so these numbers are practically inflated. Pepe, still a very good meme, has died down a bit, but is still above bear market lows and highs. Shib, not seeing any progress just yet, still above the bear market lows, but again, just consolidating. I think Doge is probably the best meme coin. It's practically more like an altcoin now, and that's why it's the main meme coin I'm watching for any sort of positions. Now, if you did enjoy the video today, please do make sure to like and subscribe, and if you want to be getting my trades sent to you every single day, then check out the Discord down below. And if you need a place to buy, sell, or trade cryptocurrency for the lowest fees with the best sign-up bonuses, then check out all the exchanges we're working with down below. Thank you all for watching. I'll see you all tomorrow. Goodbye, guys.